Thursday, August 7th. Just be forewarned, big show. Got news about Sidekick, the Fly IPO, Firefly. It's another IPO like Figma. I had a 6-figure day in the market yesterday, thanks to Apple. We will go over Apple. I will go over Apple in detail. Do you want to get into Apple now? Your choice. GLW is part of Apple now, and that's Corning, which I gave you Shopify. Just crazy, crazy. We'll go over the Gap and Trading Desk, which actually reports. We'll go over SEZL, Spotify, Novartis. We'll go over all the earnings, including Dutch Brothers, Starbucks. Well, I'm sorry, not Starbucks. AppLovin, IONQ. We'll go over everything. First off, I want to tell you, I'm not doing scans today. So if you're waiting for the 4-hour scans, I'm not doing them today because there's just too much to talk about. Second thing I want to tell you is news on Sidekick, okay? TrendSpider has decided to roll out Sidekick to everybody. If you log into TrendSpider today or tomorrow, you most likely will get a message in the upper right-hand corner that says Sidekick is available. I do want to tell everybody, I got an email from Dan Ushman, the CEO, last night, and I think it was sent out to a bunch of people, but I got an email. It's going to be an added charge for Sidekick. I don't know if everybody gets it free to start with. I don't know what the rollout is, but they did mention it's a paid option. I don't have details on the paid option, but understand this, and this is what you have to realize. TrendSpider, even though the monthly prices seem high, it's not. The cost to these guys for the data alone costs them a ton. And if you do any research into AWS fees for some of these large language models, it's enormous. So again, I don't blame them for charging for the add-on. I don't have any details about the rollout. Log in, see what it is. But if you've got an AI strategy and the pricing comes out, it's too much. I'm not going to try and push you to sell it, push to sell it. I love the integration. I don't even know if I'm going to get it for free. I might pay for it because I do like it. But then again, I just don't know the pricing. So let's talk about the markets now. It's been a while since I had a solid 6-figure day in the market, in my portfolio, overall portfolio. And the reason is Apple. Okay. And Apple is down. Let's see. Is it down 18% year to date? Let's go and look. It's the Mag 7 that has just been lagging. It's down 14% year to date. It hasn't been a good stock. And usually the 6-figure markets come in two different time periods. One, during a bull market, after a downturn, think 2009, think 2020, think 2023. I didn't have enough money back in 2000 when I was trading to have a 6-figure day. So during those time periods where there was a downturn and we saw the upturn, that's when I've had 6-figure days. Now, during a bear market bounce, I've also had big days. Big 6-figure days during bear market bounces. Think about 2008, okay? We saw April up 6% in 2008, but continued to fall. Or even 2022, most recently, when you saw March up 5%, had 6-figure days during that March when it was up 5%. So there are days when this happens. Sometimes it's at the end of a bull market. Think November 2021, right before the bear market of 2022. So where are we? So again, 6-figure day kind of triggers me. Okay, do I need to buy more? Well, I did buy more yesterday. I'll go over exactly what I bought. But you are in a bull market until you are not. Understand, you are in a bull market until you are not. And we've been on a bull market. This bear market of 2022, I don't even know if I'd call that a bear market compared to my early days of trading back in the early 2000s. Look at how flat that was. Okay, you bought here in 2001, April 2001. It took you all the way until November 2007 to actually become even. So I don't know if this is the start of a bear market pullback. I don't know if this is the start of a bigger bull run, but we're going to go over that. But let's just talk about today, because today's another big day for IPOs. Okay, we saw Figma last week, I think it was. Figma. Everybody started asking me about Figma. Nobody's asked me about Firefly, but this one is portraying very similar aspects because it's oversubscribed. Expect this one to trade crazy. Now, if you got issued shares, some people, they might be rich. You may have gotten issued shares. Initially, this went out at about $10 last week. Okay. It then went to $25 yesterday during the day. And now this is all pricing. So essentially what the bank does is they send out a bunch of things and then people come back and say, okay, I'm willing to pay this price. Last night it priced in at $45 a share. So in a week, that went from $10 to $25 to $45 overnight. Okay? Expect it to trade crazy. Expect there to be huge volatility. I will give you this advice. And again, I don't like IPOs. Do not get into this unless you are investing in the business, because again, it's space. It's a hot business. Rocket Labs is out there, or you have experience trading. And when I say experience trading, I mean like the education section that I have in my in the paid newsletter, where you can learn confirmation. Okay, it's a simple confirmation is a very simple pattern of trading around moving averages. It's nothing difficult. You can go and Google it without paying me. But if you don't have experience like that, just understand there will most likely be halts in that trade, which means you may buy in at 80 where it opens, and then it's halted. It runs up to like 100 and you can't sell it because it's halted again. And then it falls back to 20. That's how big a swing you can actually get. So expect them to be crazy because it's just oversubscribed and priced like that. Okay. Yesterday, I added quite a bit more. I think about $40,000 to my Alpha Picks portfolio. I readjusted, reallocated, did additions. I did the buy and strong buy stocks. Okay. The buy on 615. So the Alpha Picks, if you don't know Alpha Picks, it's a portfolio that outperforms the S&P. 2 data-driven stocks a month, one on the 1st and one on the 15th. Now, there was a stock on the 15th, okay, June 15th, which I can't mention the name of, but it beat earnings yesterday. It was up by 18%. I traded that one because you had to buy in the 4-hour algorithm, okay? Yesterday, it was right before the earnings. I said, you know what? I bought my allocation, but I like this stock. It's a gold stock. And it added in the 4-hour algorithm yesterday. The day before. And then yesterday, I sold out. Again, a strategy I've mentioned before is using the Alpha Picks as a tool and then using the 4-hour algorithm to boost those portfolio winners. In the portfolio, CRDO was up 6% yesterday. This is just the Alpha Picks portfolio, which, by the way, CRDO got you in, out. Let's take this one out. We're going to remove that segment so you can see it's a 127% gain. Again, on your screen, 127% gain. And that's just from April. Okay. It got you back in at 102. 102. Now, I'm the guy that sold at 95 based on valuation, but I am still holding a very large amount of this in my Alpha Picks portfolio. So it's not like I got out. I'm waiting for them to tell me when to sell. But this one, if you had bought again at 102, you're up 17% in about 12, 11 days. It may be making another run with a goal. Again, This is a golden cross right here. This may be another run. When you go to a weekly chart, you don't even have the 200-day. MACD extended. But again, this one went on a 6% run yesterday. Back in May, it was a 20% run when you saw the last golden cross. You saw this death cross, but again, back here you can see huge moves. Now another one, there was another stock that was bought recently, UNFI. UNFI got you out with a 20% gain yesterday. 20% gain. Okay? And it's going for a golden cross. So, do you want to buy in? Well, 4-hour algorithm makes you 72% versus 33%. Again, this is just alpha picks. Then you have Bluebird yesterday. Bluebird earnings beat. Now, this has been a portfolio loser. Okay? This is yellow school buses. This has been an alpha picks loser in the portfolio. But are we turning it around right now? Look at that. Weekly, MACD looks like it's right on the oscillator. RSI a little bit extended. You use that 28, that previous all-time high from April 2021 as support. Again, this was picked earlier this year, so it's been a loser, but now it's been a winner. If you bought off that support line, boy, it's a winner. Run the 4-hour algorithm. Doesn't have you in. Their earnings just came out, a 10% move. 10% move up. So my point is, this is a great portfolio. And then what did I do on top of that? I went to Seeking Alpha Premium right here. You can get Seeking Alpha Premium. And I bought more of the top 6 of the top 10 second half stocks. So yesterday, I went on a buying spree. Just a buying spree. Again, up days. You want to know what? I felt good yesterday. Apple. Did I tell you Apple was a great buy at 200? If you bought there, you're up 7%, you're up 10, whatever it is. The risk reward was not much. Tim Cook and Trump are now friends. They're going to invest $100 billion more. Trump even had a press conference with him by his side. Cook gave him a solid gold kind of thing. I don't even know what the F that was. And then Trump said, you know what? Apple's not going to be affected by the India tariffs. In fact, during the press conference, and this might have not have made it on TV, but it was widely reported during the press conference, Trump said, I think Apple does enough in this country. Tariffs shouldn't affect them. The Trump feud is over. Okay, that's been a weight on this stock. In the pre-market, you're up another 3% to $220. Now, I wouldn't expect it to get over 220 until you have some other kind of catalyst. It is still an expensive stock. Understand that. 220 is right where the 50-day is. I don't expect this one to get back to the 260s anytime soon. Could be this year, could be next year. But the risk reward for me is perfectly fine. I don't want to sell this one at this low price. I'm going to sit there and hold on to it. Am I going to add more? No. I've got, again, 6 figures yesterday. I've got plenty of this stock. That's why I bought Alpha Picks. That's why I bought the second half top 2025 stocks, because I added to those positions to help diversify my portfolio. So Trump imposes additional 25% tariff on India. He's going to impose 100% on the chips, he said yesterday. Again, tariffs are still in the news. And if yesterday wasn't enough, again, post-market, this one's still going up 3%. And then in the paid newsletter in January, I gave people GLW. GLW. Since it was picked, look at this one. This one is up, let's see, pre-market we are trading at 66. So let's go to 66. 66 is up here. You're up 39% year to date since I put it out there. Again, January 2nd, could have bought the 4-hour algorithm on this one. Again, 4-hour algorithm beats buy and hold. Again, TrendSpider, top link. You can get it, $50 a month. You can make money with the 4-hour algorithm. It's a great tool. Seeking Alpha, we talked about premium and alpha picks. It comes in a bundle. That's the second link. So you can get it. Again, this is what I use to make my buys and sells. That's it. I have 3 tools. That's it. And then I'm on Twitter following smarter people than me. And Ryan, not exact, but it's pretty damn close. This is the bull market of 2009. Let's see. Well, let me look at his description. This is the bull market of 2009 to 2020. Okay, 2009 to 2020 is the blue line right there. October 2022 to what? We're in August 2025. It's not exact, but it's pretty damn good. And look at how much more we may have to go. Again, it's not exact. You will have catalysts that bring this down. Say we have a recession, it will bring it down. But it's pretty damn good. So when I say we're in a bull market until you're not, that's what I mean. Does it mean you go out and spend all your cash now and just buy in it now? No, I still think we see a 5% pullback. But everything I bought over the last week or two, it's not a trade. I have identified it as long term. Some of these, like the top 2025 picks that second half 2025 picks, some of them are trades because I found strategies that work and identified those strategies. So just like the IPOs, when I know exactly what my upside and my downside is, I know exactly where I'm trading those stocks. Make sure you have an idea of where your top and your bottom is. Now, there's top stocks right here, okay? I usually go in here and I look at the top stocks and I look for ones. There's Heritage, which actually was down yesterday based on their earnings. It wasn't very good earnings. It's an opportunity. I think it's still a solid business. But there has been one, SEZL. This has been a huge winner. It's a strong buy. This one got killed yesterday at 6% down. Any reaction is an overreaction. You're up 2% now. It is a good trade. That's what I would say. SEZL, fine trade. Fine trade. Okay? The 4-hour algorithm got you out with a 2% gain. Maybe the 4-hour algorithm is what you want to protect yourself. It doesn't beat buy and hold. This one over the last 24 months is up 3,501% versus 2,698 if you use the 18 positions that the 4-hour algorithm gets you in. I'm fine with 2,600% if it protects me a little bit from the downside, from that big drawdown. So again, find the stocks that you like and go and look at it. One that I had identified, the trading desk, TTD. Okay, I've identified this as filling this gap up to 121. Look at how it's starting to do that. We talked about power gaps yesterday. I wanted to bring up a gap I brought up many times before today. It's trading desk. Shopify was up 20% higher yesterday. I am waiting for a pullback. Want to know why? Because I identified this line. And did I buy it down here? No. I'm a dummy. I don't time things perfectly. But look at that trend line. It is almost perfect. When did I draw this? Way back in October when it started taking off. I had mentioned, hey, this one is a really good line. Where are we going? Probably at all-time highs at 180. Is it going to pull back? Maybe. I hope so. Maybe I can get in at a reasonable price. And look at the top movers in Fidelity told me yesterday. RMSG up 59%, AIMD up 49%, Go Grocery up 38%. Do I have any of these? Hell no. No. The reason is because I know my lane. And yesterday I was buying a bunch of stocks and I'm like, okay, I can't buy more because I have enough to manage. So understand that 20 positions in my portfolio is usually way too much for me to handle. And one of the ones that I have that I just buy and forget is Spotify. This is one that I just hold. Want to know why? Because the performance chart here, 186% versus 350%, I want to buy and hold. 4-hour algorithm bounced right off that previous high of 617. You're at 667 right now. If you had just identified this as support and moved in, it's ready for a turnaround. I like it. You want another trading idea? Well, Granny Shots, that's Tom Lee and Dan Ives. Here's their top holdings. Hood, this is Granny Shots. Okay, Hood, AMD, Oracle, GE Vernova, NVIDIA, Palantir, GE, ANET. These guys bought many of these at the all-time highs because they just started their ETFs. And Ives, NVIDIA, Oracle, Taiwan Semi, Broadcom, go and look at these lists. And go and look at how the ETF performs. And by the way, if you don't want to hold those individual names, go and get the ETF. There's nothing wrong with doing ETF investing. Single stocks are dangerous. And by the way, one of these guys, NVTS, this is a US-based chip company, NVTS. There was an insider buy, okay, yesterday, or NVTS, and director just bought $164 million worth of the stock. Okay, on July 28th. We go to Finviz. This is usually where I like to look at my insider buys. It's not, seeking alpha. I like to scroll down here and see a bunch, if there's an insider buy. There you go. July 28th, $164 million worth of buy. Where'd he buy it at? $8.79. Where you trading right now? $6.52. What did he buy it at? Yeah, $8.79. It's way down. Again, he bought a bunch of money. Is there something going on here? 4-hour algorithm? This is going to blow your mind on this stock. It makes you 37% over 31 positions over 24 months. Look at the last 4 buys. 9%. 136%, 37%, 14%. Doesn't have you in. Wait until it gets you in. You're going to get it cheaper than this dude who just spent $164 million. Maybe that makes sense. Again, maybe that makes sense. Is something going on there? Maybe. Now, we have earnings, and I want to point out, I don't know how to do options. I don't like to think that much. These ETFs help the F out of me to leverage myself. Okay. MSTU, we've talked about MSTZ. We've talked about TSLQ. We've talked about TSLZ. We've talked about all of these. These are leveraged ETFs. They're daily leveraged. So these are things that you can use around earnings. If you have a good setup, these are ETFs that you can use and you can trade. You can look at the charts. I think it's much easier than options. And anybody that trades options is going to yell at me and say, well, why are you paying that fee? Because I don't want to do options. One that I had a good feeling about was Dutch Brothers. I said, if you drink coffee, maybe go and taste Dutch Brothers versus Starbucks and decide which one you want to. This is up 20% in the pre-market. This is where all the Starbucks customers are going. They were only up 13% last night when I wrote my note. Let's go and look at the chart. BROS. And by the way, it is expensive. 4-hour algorithm got you in at $59. Where are you trading right now? $69. It's a big move. Now, would I have bought this? No. Full disclosure, I don't drink coffee. I've been to Dutch Brothers twice. I like their drinks, didn't love their drinks. I actually like Starbucks better. So I'm not a coffee connoisseur. But the growth is phenomenal in Dutch Brothers. Now, where does Wall Street think that it's priced at? They think it's worth $78. Again, you're trading at $69. But there are 17 analysts that average price at $78, and it was trading at $57 yesterday before earnings. Now, if you want to know how to trade this one, go and look at a 5-minute chart. Okay? Look at a 5-minute chart. As it started to break out, could have gotten it at 64. We're at 69 right now. That's a pretty good move. That's after their earnings were released. Again, the earnings were really good. So you could trade that one on confirmation. Another one I like, AAPL, double beat. This was down 4%. I think this one moves higher. I like this one. Again, a double beat. You've got a big short position in this one. Okay, algorithm got you in here 346. Where you trading right now? 390. 390. You haven't filled the gap up to 421. 390. Again, slow and steady. It's up. 4-hour algorithm makes you 1,079%. Over the last 24 months, 19 positions, you win 63% of the time. Did I take this trade? Yep. This is an alpha pick. I'm adding to my winners. Is this an overall winner? Right now, it's just trading sideways. Boy, if you traded this one, if you just bought alpha picks in February and you bought this one, you were down 60% on this. Now, if you use the 4-hour algorithm, you started buying. So maybe you're not down 30%. Maybe you're actually up. That's how you use the tools. I think this one is going to continue higher. AAPL, it's a hold in the quant. Why? The valuation's a little bit stretched. The PEG ratio at 2.19, that's not great. But their growth, 41% revenue growth year over year. It is priced for perfection. But again, I think that the double beat, it's a good thing. They have 3% short interest. I can't believe it's actually that low. But go and read the earnings call insights. These little things are great. They are great to read. Now, everybody's quantum computer favorite, IONQ. I want to just point this out. Yeah, they slid 3% amid mixed outlook. Mixed outlook. Okay? Mixed outlook. Their revenue was up 81% year over year. And get ready for this. Okay? Their revenue was up 81%. IONQ has an $11 billion market cap. And I just mentioned the revenue was up 81% year over year. Want to know what the revenue is? 21 million, not billion. So that market cap is enormous. And the profitability sucks. They're not making money. The growth, fantastic. Revenue growth year over year. Again, that 81% is quarter to quarter. It's year over year from this time last year. 69% year over year. So it's growing, but is this your quantum play? My quantum play is Microsoft and Google. They actually make money. Again, I'm 51. This Sunday, I'll be 55. But again, that's the way I look at things. I want the big names. Now, Open Door. We've talked about Open Door. This was down 24% yesterday. They gave the shorts exactly what they wanted. Poor Q3 guidance and an earnings miss. This was nothing more than a meme stock. Now, is it something that you want to invest in? There are guys out there who are saying this is the next Carvana. Carvana went through similar things. You're going to have to put up with that. But again, Open Door, they gave the shorts exactly what they wanted. A bad quarter. If this was a good quarter, you would have seen this thing shoot up. Instead of down 24%, you'd probably be up 100%. The business matters. And I don't know anybody. I mean, honest to God, where is the person that's shorting this at $1.90? Why are you taking on all that risk when you only have like $1.90 down? You're expecting it to go down. Just, again, know what you're trading, know what you're buying. Fortinet, Q3 revenue outlook falls. Fortinet It's clear, absolutely destroyed. Relatively good earnings, just the outlook falls. It's just too much. Why? Because this one ran up a ton. And we'll take a look at the chart. We'll take a look at this chart. Look at this run that it went. Previous resistance was 80. Where are you trading right now? 75. Expected to get between that $70 and $80 mark. Now, is it cheap? No, not really. It's still expensive. I mean, it is still expensive because it's not growing. 13% revenue growth year over year for a cybersecurity platform. There are so many others that are better. CrowdStrike is better. Palo Alto, even though that one's taken a hit, I think that one's better. But again, you have to come up with your thesis on these things. And Fortinet, was I buying it up here, way up here in the, where it was trading, bouncing around between 103 and 104? Nope. Am I buying it down at 75? Maybe. It's more likely that I'll buy at 75. But where'd those ranges come in? Look at the range that it was in. I mean, it was clearly in a range here all the way. It topped over here at 72. Okay, December 2021. We just broke out of that. This top range, probably 81, which was the 2023 highs, that's probably going to provide some type of support. Now, if we continue to go down, it's going to provide resistance. Oh, and there, it updated automatically. I was waiting for that to come out. But again, Fortinet, is it one that you want to invest in? I don't know. Now we're going to go over to Earnings Hub because there's a couple that I want to point out to you, okay, that just reported this morning. Celsius. And again, part of the reason me doing this is because everyone has access to Earnings Hub. It's free. Celsius blew things away. It's up 25%, okay? An absolute killer quarter. Behind my head, you will see Q2 earnings, revenue beat by 13.5%. Earnings per share beat by 95%. Is this one you want to get into? For me, I hate these damn drinks. I don't drink these drinks, but you had a nice gap fill down here to provide support at 41. Where are you trading in pre-market? 53. Is this one you want to bank on coming back? Because the 50-day has started to turn. You're going to trade just outside of these Bollinger Bands. And they cinched up. Maybe it's going back to its all-time high at 99. Could be. I don't know. Another one on Earnings Hub that I noticed this morning, and maybe it was, no, it's this morning, was Peloton. Okay? Peloton. I worked with their CEO. Their CEO, Peter Stern. I used to work with him at Time Warner Cable. Fantastic, fantastic management. Don't underestimate good management. And Peter knows what he's doing. But make no mistake about this. They beat earnings per share by 183%. They beat revenue by 7%. Make no mistake. This is a business that's a trade. Peter is going to clean things up. I absolutely know that about him. It's a great brand. Overall, it's a tough business. It's subscription, overpriced exercise equipment. And that's the problem. He's got to cut costs. My guess, he's setting this up to try and sell it. Now, where would you sell it? Again, you'd have to pay a market premium to buy it. Who would buy it? Maybe Nike, maybe Under Armour. Maybe even Lululemon. Maybe they get into this, even though they already have some exercise equipment. But again, I think that's what he's doing. So make no mistake, you have to find a strategy for that one. It's not something that I would say, oh my God, they're going to continue to kill it. They're going to talk about killing it, but I just don't see them having it. Now I'm going to use Earnings Hub to go over some of the things this weekend, but I want to take your weekend into account. Okay? I want to take, these are 10 movies. I've seen The Big Short, love it. Margin Call, love it. The Wolf of Wall Street, great. Boiler Room, it's on my watch list because my buddy told me he lived through this. Too Big to Fail, absolutely amazing movie. Floored, never seen it. Inside Job, absolutely great. Playing with Fire, haven't seen it. The Ascent of Money, absolutely fantastic. Enron, The Smartest Guys in the Room, Great movie. And again, these are movies that can help you with your trading. It's stories about traders. It's exactly what you want to be doing. And these are guys who have either won big or failed big. And then we can talk the man himself, John Bollinger. I talk about the Bollinger Bands all the time. We can go and look at Apple. Okay, see this little blue shading? That's Bollinger Band. It's one of my main indicators that I use. When they contract, it's getting ready to move. And John Bollinger, he's on Twitter. He just pointed out Bitcoin and a number of other cryptos are setting up a head fake after a Bollinger Band squeeze. Interestingly, the pattern is not evident in the ETFs as they don't trade on the weekends and holidays. So IBIT and other like Ethereum ETFs, they may be setting up for a head fake. And he's saying that. So are you buying here? I've heard from quite a few people in crypto that, hey, we need a pullback. Now, one of them that I think is a kind of interesting is this one that that Shy brings up. IREN hits a record 86 million in July revenue. Okay, IREN is a stock. They went from Bitcoin miner to data center supply. Again, buying the 4-hour algorithm right here at $17.77. You're trading at $18.85. Is this a stock that you want to get into? It's brand new. Are we going back to the IPO prices at 25? That'd be a pretty damn good move. And it's got some sizzle to it. So I like it. Now I want to go over, I've said many times before, this is a AI and GLP-1 market. I don't know that we're in a GLP-1 market anymore, okay? Here's the thing about Lilly. And it's down big in the pre-market. It's down under $700. It's down about 7-8%. They released their pill results, and that's been the promise of Eli Lilly, is that you're going to get it instead of GLP-1 shot, you're going to get a pill, and the pill is a big effing deal. Now Novo has already released their pill data. The problem is that Novo Nordisk just has crappy management. They can't produce this stuff. Eli Lilly is big enough so that if they get an effective pill, they can produce it. Now, I want to point out some of the bad things, okay, that this study just had. 25% of the people that took the pill stopped taking the pill. And they said it was based on gastrointestinal stuff. This includes diarrhea. This includes vomiting. So again, it's something that is not seen in the shot as much, but it's seen in the pill. And 25%, so 1 in 4 people stops taking the pill. That's it, just during the trial. The pill is easier. It's also cheaper. But it's clear Hims and other compounders are going to start taking the bite of this because they promote today compounded GLP-1s. And Novo's pill is actually better. Novo is up 7% in the pre-market. But again, this is a mess. I would if you are in this market, I would stick with Lilly. Even with the 7% down today, I would stick with Lilly. The reason I'd stick with Lilly, it's not just a GLP-1 company. That's where I would stay. I am not in this one. I have not traded this one recently. I have not been interested in the GLP-1 market lately. I haven't talked about it lately. It's in the core portfolio, but I know I've brought it up for some of the longtime listeners that Lilly is a $900 stock. I still stand by that. At some point in time, I think it starts going back up there because they have too many good things going for them. So let's go over today's earnings or tomorrow's. Today after the bell, you got Rocket Lab. This is interesting. Expect volatility. I like this one, but has it run too much? Again, you have to know that some of the RKLB, some of the stocks that have run up into earnings have gotten killed on the earnings because they've just run up too much. 4-hour algorithm has you out. Okay, but the 4-hour algorithm Makes you only half of what you if you buy and hold. For me, this would be too much for me to buy and hold. So I'm happy with the 4-hour algorithm making me 243%. Again, I would look to that $15. You're trading at $44. I would look at that 15 as some type of pullback, because the only other pullback that you have is the previous all-time high right here, which looks like it's around 31 right there. So if you buy at 44 and you dip down below 31, expect probably 20 to be the next target. And look at that MACD. It's a little bit high, but you could get crazy. Again, Rocket Lab, this is the only other space company other than SpaceX that Trump can go with. They might announce something huge. You have SoundHound, which again, NVIDIA got out of their investment. Another one. Expect moves on this one. These guys have actual revenues. These guys put their AI stuff into cars to understand what people are talking about. This one, the 4-hour algorithm, it makes you 1,063% versus 352% if you buy and hold. Now, it only wins 35% of the time. Your average win is 64%. It's 26 positions over 24 months. Is this one to buy at $11? Well, we're on the upward move. The MACD, unlike Rocket Labs, it's right on the oscillator right there on the weekly. The RSI is at 51. And you go and look at their earnings, they're expected to lose 7 cents. What did they announce last time? They lost 6 cents. They were right on. Then you've got nuclear SMR. This is nuclear. I mean, it's not about earnings. It's about forecast. Last time they beat earnings, they killed it. 288% over estimates on revenue, 26% on earnings per share. SMR, is this one run too much? Again, it's nuclear. 4-hour algorithm just got you out. This one beats buy and hold. So you've got to know the setup that you're going in with. Again, these are going to move. Pinterest is an interesting one because we heard Snapchat, they didn't charge their advertisers. Pinterest probably did. We saw Google and we saw Meta just kill it on advertising. They're expected 22 cents. They reported 23 cents last time. So estimates have been brought down. 855 million in revenue. They're expected to grow to 975. This could pull back if you see it miss on revenue. Now, one of the greatest stocks of all time, Monster Beverage. It's been the greatest investment over the last 10 years. Can it beat Celsius? We just saw Celsius run up 25%. Monster Beverage, they're expected 48 cents. They reported 47. This is a more stable business than Celsius is, so I wouldn't expect it. But again, I bring it up because it's been the best investment over the past years. And maybe they're getting their mojo back. You've got MP Materials. Trump loves this company. I don't think he even knows what rare earth is called because he said California has great, he said California is rare earth. I have no clue. But again, this one has run up. It's up 7%. And that's because, again, look at this. If you bought this in May down here at $19, you're at $67. This one's nuts. But again, the government owns part of this. Now, another one that reports today is GCT. This is a former alpha pick, okay? It got caught up in a bunch of short interest. Last time, their earnings per share beat by 56%. Their revenue beat by 4%. GCT is the symbol. And this one has been nuts, trading between this 18 and 25. We ran up there, just got you out with an 11% gain. The weekly, you can see it's just in this. Understand, this is a very small cap company that does business to business, and it has China exposure. So it's risky. Another one that's had huge wins is GoDaddy. Last time they beat earnings per share by 10%. They're expected to actually go down. Earnings per share they reported last time, $1.51. This time, $1.34. GDDY. This one has traded really well, of recently. But see, it's pulling back. Are we going to get them to beat? And are we going to see that turnaround? Maybe. It's about risk reward. And is GoDaddy a great company? Right now, let's go check out it's a sell. So I don't know that I necessarily want to do this. Has negative earnings per share revisions and decelerating momentum. So it's not one that I want to predict the bottom on. So you have to know what you're buying. You have to know what you hold. Like I said, my best play in my portfolio is Apple. And the reason Apple, I think the risk reward is there. 2 billion people have a freaking iPhone on this planet. They will figure out AI. In my mind, it's a $260 stock at some point. Do I demand to get out of it? No. Do I need the money? No. I've got plenty of it to invest in other areas. And I've sold plenty of it at 260, at 240, at 220, and even at 200, where I panicked in April. And I sold out. I sold out Apple at 200, and I said, if it continues to go down to 180, I'll sell it. It's about understanding your entry and your exit plan. And so I've developed my exit plan for Apple. It's probably over a 30-year period. It's not immediately. So if you have any questions, hit me up. Again, TrendSpider is on sale, $50 a month, plus the bundle here. You've seen me use all these tools. I use plenty of free tools as well. Just make sure your toolkit is enough to sustain what you're doing. And if you have any questions, you can hit me up. My email address is right here, or you can just reply to the newsletter. Any questions? Just hit me up. Okay, see you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.